Yo, what's good YouTube? So, welcome back to the channel. Today, what I'm going to do is I'm going to do a video again on footprint mastery, understanding the footprint chart for anyone that is still trying to learn it. Okay, it takes a long time to learn it, so whenever I take a trade or whatever I'm thinking, I'm just going to post a YouTube video on it just to kind of help whoever is struggling with footprints. Alright, so what happened this morning on the London session on Monday, which is today, is I missed a short trade up here. Okay, if we have a look at what happened going through the nighttime session, let's just cover why I missed it first. I come to the charts at 3 a.m, which is here. So as soon as I turned on the chart, came to the computer, we were down here. So I didn't want to trade down here, but if I was here half an hour earlier, I would have caught this trade. I take my partner to the train station in the morning, so that is how I missed the trade this morning. So if I just cover what actually happened is, we then had an expansion down overnight. When we opened, we just expanded lower, then throughout the night we just consolidated. Okay, so we always want to trade a manipulation of a consolidation. Alright, so all you need to do is wait for the high of that to get broken and then look for an entry within that to confirm the move lower. Again, why was I thinking that? All my analysis goes back to the daily time frame and what I'm looking at. If we do see what happened on Friday though, we took out Thursday's low and closed bullish, so we could have expected a bullish candle today. But what happens is, when you trade into like a fair value gap, there's so many traders trying to take this first entry. Okay, so what they don't realise is they'll drive price back into it again to sweep out all the early buyers before a move happens. Alright, so I was still targeting this daily fair value gap, weekly fair value gap, to then move price higher. Okay, so then when you come to the charts this morning and have a look, I see this expansion down and then we're just consolidating. So then when you come to it, you can see the manipulation, and then all I would do is look for a footprint entry within here. Alright, that is all I would do. So we'll cover that on the footprint chart, and I'll just cover a little long that I've took in here as well. Okay, so on crude oil, if we have a look on the daily time frame, what do we see? Yes, overall, as I've did on a previous buys video, the EMAs are bearish. Okay, so we should only be looking for shorts, but there's nothing to indicate a short yet. We need to wait for a swing point to potentially form to look for a short. So if we look at what happened on Thursday, we took out Wednesday's low and closed bullish over the body of the candle. Then Friday we expanded, and then we closed over the high of Thursday's candle. So then Monday going in, you can probably look for a buy. Where to? Probably this high, it's sitting here, and this high, it's up here. Alright, we've absolutely smashed through the first zone, so this would be my next target. Again, seasonality is also bullish, so I wouldn't be surprised if we get up here, even to this high. Maybe fill in this fair value gap, then look to maybe go shorter again. But anyway, that's not the point. Looking on the 15 minutes, so overall I'm bullish, looking for maybe a little push higher. Scaling on to the 15 minute time frame, what do I see? Okay, so overnight Asia, we just consolidate. Then the London, when London starts at 3 o'clock, again when I cut my chart, we've already made this huge move. So all I'm looking to do is get a continuation of this move, as I'm bullish biased, so I'm waiting for price to then come lower, give me a setup on the footprint to then take a long. Okay, it's not the best because we're pretty overextended. If I look at the average daily range, we've already hit 100%. So if we look on the right hand side here, we've hit 100%. Oh, you can't see it, sorry, but this is basically saying that we've hit 100% of the ADR, so we've already expanded 100% of the daily range that we usually hit. So you can't really expect it to go a lot higher. We're also overextended if we look on using our Asia range for standard deviations. We're hitting like the 4 to 4.5%, so we can expect price to pull back a bit. But the footprint gave me the opportunity, so I'm trading it just to see if I can get anything out of the move. It's just on a challenge account, so that is it here. We're up 23 ticks at the moment. We'll manage it. We're hoping to take it to this high, but again, I don't know if it's going to happen, just due to the fact that we're pretty overextended on the day so far. But we'll cover it on the footprint. The mastery class that I want you to understand is how I see the footprint chart, how I get my entries, and all of that. So again, yeah, we'll cover this short that was up here, and then we will cover the buy that I've took down here. Okay, so let's jump over to the footprint and we will cover that. So let's start with GU. What do we see? Alright, so at the very high, which is up here. Okay, So this candle here is what we're going to be focusing on. So this is a consolidation that I covered, and then all we're looking for is the manipulation, and then looking to enter. Alright, so what do we see on the footprint here? If you've watched my previous videos, you'll know there's three main things that I look for within this reversal candle that I'm looking for. Number one is I'm looking for trap buyers at the highs. Okay, so I like to have 2 or 3 areas of quite solid blue. Blue only shows up when it's above 25. So on my color, on my threshold, if I'll show you this for anyone that's wanting it. So the color threshold is 25 for the total delta. So on the right hand side it shows total delta. If the total delta is over 25, it will show as a blue or red. Alright, depending on if it's bullish or bearish. So I like to see at least 2 positive delta if I'm at a high to see the trap traders. I like to see no more willingness of buyers at highs. Okay, so either a 0, a finished auction, or under 100. Okay, so that to me is a stairs case, stepping down, showing that there's no more auction willing to buy any higher. Okay, so the auction is over. Now sellers are then, all I'm waiting for is sellers to show up to then get involved in the trade. That's exactly what's happened here. We've got the buyers getting trapped at the high. It's better to see them in the wick as well. Once we see that, we then have a bearish imbalance. Okay, so as soon as these sellers are trapped, aggressive sellers are seeing this and getting involved in the trade straight away. So if you see bearish imbalance at the wick of the candle, that is a strong insight that price wants to trade lower. What then happens is we then close bearish with another bearish imbalance. And what else do we see here? We see bullish imbalances. Okay, but if buyers are strong here, price should technically go higher. What is happening is the sellers are too strong. Okay, so the candle closes bearish. If we also look at the last thing that I look for, which is down here, which is delta divergence. Okay, so on the delta here, we've got a positive 94 delta, but the candle closes bearish. Okay, that is a signal that price is going to turn round, a cracking correlation that we might see then extended move to the downside. So what you can either do is you can enter the trade direct to market once you get this candle closed. Okay, why? Because we've got the trap buyers at the high, we've got no more willing buyers to buy higher, we've got aggressive selling coming into the market, we've got bearish imbalances. Alright, so you can either enter on the close, or you can either enter two ticks below the POC. Okay, so 1, 2 would be your entry. Once price comes up into this, you then enter and go short. Or if you want extra confirmation, you'd wait for more sellers to show up on the next candle. As you can see, the next candle is just totally bearish. Okay, look at basically every single point on this bearish candle is got a bearish imbalance. Okay, so you've 1, 2, 3, 4, 5, 6 places on this candle where it is bearish. Alright, you've also got a very strong negative delta showing that the sellers are very aggressive, and you can enter the trade either on the close of this candle or as soon as you start seeing these sellers coming in. Personally, I always enter on this next candle, so once I get the confirmation candle, I'll just enter mostly on the open or 2 ticks below. That is all I simply do. I'd recommend you stick to one entry criteria. Alright, you don't want to have hundreds of different ways to execute. Just kind of muddles your head up. You don't know if you should take that one or go for the next one. Just stick to one, go with it, and that should be enough for you. Then, as you can see, price just absolutely melts lower the full time. Alright, literally all you see is buyers trying to get caught at the high, price closes bearish. Trap buyers again, we get aggressive sellers, buyers trying to come in, getting trapped, buyers at the high of the candle getting trapped, and the aggression is just too strong. Okay, we keep pushing lower, then we've started pushing higher a little bit now. It might just be a pullback. If we have a look here at this is what I mean by a dirty low. Okay, so when you've got sellers, well, you've kind of got 100, so it's, you could say that I say it's always under 100, but when you see a block order like this at the low, mostly it's going to revisit it. Okay, it's an unfinished auction. There's still auction willing to go under here, so there's still willing sellers to sell under here. Alright, so there's a chance that price will come back to this area. Then once you see the buyers starting to get in, you just look for a trap again, find the aggressive sellers coming back in, and look to enter the trade. But this is a very good example for anyone that is wanting to find out a good candle to get involved in the market. Just look at the next candle. It's just insane. This is basically a free trade. Once you see this second candle, you know the sellers are very aggressive. The buyers have got no chance to hold price. Okay, but again, we can get in on this candle just by finding the trap. No willingness of buyers at the highs, bearish imbalances, closing under the bullish imbalances, and we close below the POC. Alright, so that is a very good signal. We've also got a delta divergence. So that is the setup that we had on GBP. Now looking at the crude trade that I've took, and this is it down here. Okay, so again there is a block order here, so it's like a B setup. Okay, so I like to categorize my setups as A, B and C. An A setup is obviously what you just seen on the last GBP. That's an A setup. Okay, we've got decreasing delta at the high, we've got trap buyers, we've got a bearish imbalance. Okay, that is, and we've got divergence. So that's an A setup. So you can go full out contracts on this trade. Okay, but then when we look at crude, this is like a B setup. Okay, so we've got block orders at the lows. Alright, we've got bearish imbalance at the low. Alright, so it's not the best setup, and you just lower risk. So if you want an A setup, I usually risk 2 to 3 contracts. B setup, sometimes 2, and a C setup is 1 contract. Okay, so to me this is probably a C setup, so I only risk 1 contract on it. Wasn't 100% on it, but it still happened at a key area. Okay, so if it happens at a key area but it's a C setup, you can still risk a little small portion on it. So let's cover it. Price is pushing down into the fair value gap. Alright, so this fair value gap, which is here, the price comes into it, and this was an area that I was liking to see along. If the opportunity presented itself, we then go back on here. What happens is we see the aggressive selling at the lows, aggressive selling again at the lows, price then closed bullish. Alright, we have bullish imbalances coming in, we have buyers stepping in on the delta, and I would prefer a divergence on here. Okay, but we still closed over the 2 trap sellers, we closed bullish, and I took the trade. Alright, you could wait for another candle to see another buyer showing up, but for me I like to get in on this reversal candle for the sheer fact that I use a range 15. Okay, so it's not like I'm scalping, it's kind of a close on this candle is like a inversion on the 5 minute if you trade ICT. That is basically how I'm trading it. Okay, so that's why I'm confident to take it on this trade. My stop loss is always below the low. Alright, and then again I want to see 3 things usually, which is decreasing on the delta. I don't like to see a block order, but we're under 100. Okay, so when we're under 100, that is enough for me. I see the trap traders, and then I see the buyers stepping in. Alright, so it was a valid trade, and then you can see we're pushing up a bit higher. So yeah, that is basically what I wanted to cover today. Maybe one more thing I would like to cover is another option for an entry if you want. Okay, so what happens is, once we get our correct candle that we want to see, which is this, you can enter on the strongest area of selling on the delta. Okay, so once this candle closes bearish, instead of entering on the close of the candle, what you would do is you would find the strongest negative delta within the candle, which is minus 78, and then as soon as price comes back up to it, you want to then sell. Why? Because if sellers are strong enough, they will defend this area. So you enter here, once price comes back up, stop loss goes below the high. Get a tighter stop loss. Sometimes it doesn't hit though, that's the only issue. So sometimes it won't get that. If you're waiting for that, the price will just go without you. That's why sometimes I like to do 2 pips below the POC, because the POC is the strongest point in the candle. 2 ticks below it, you can usually get a pretty good entry. Most of the time it will come up, stab you in. You won't get the very low, you'll manage to save yourself a few points, a few ticks, and then it will go in your favour. Alright, so that's just another way of entering. So the 3 ways that you can enter is just wait for the reversal candle, enter on the new candle open. You either enter 2 ticks below the POC, or you find the strongest area of selling. If it's a bearish bias you have, you'll take the trade as soon as it taps that, or if it's a bullish candle, you find the strongest area of buying. Alright, so that is everything that I wanted to cover on the video. If anyone's got any questions, again, as always, just shoot me a message.